Okay, let's take a look at what has happened today. Um, it's just slow going. That's all this is. It's just slow going. So when we took a look at this morning, the objective was to get a bullish sample. And so far today, we haven't. You see, decay hasn't gotten down near zero. I thought that would move a little more quickly. We were about here. And velocity has taken its sweet time and is now pretty close at 11. So we're getting closer, and it's just churning through the day. Now, this is a tough day because the advanced decline is very positive. We've been looking at plus 1200 most of the day, and a majority of the day has essentially been moving downward. Oh wait, hold on. Let's finish off the week correctly. So that's really what makes it tough. There's a lot of tools that are going to have a difficult time understanding what's going on with the advanced decline being so positive. How can stocks be up while things go down? Yeah, it's just how it works. Okay, so what we're looking for as we move here, and you can see we're getting nice and close with 8, is this bullish sample. I want to see the bulls come in. One of the issues that I've had today and yesterday is, where are the freaking bulls? Come on, guys, show up. Let's play this game. You can interpret them not showing up in a lot of different ways. I think essentially, if you think about it as there's this clearly this something, keeping the bulls from being able to get samples in different areas, it's just not happening. So this is a difficult situation to be in, where you have the markets just moving down while the advanced decline essentially, opened pretty high. It's stayed up pretty high all day. It's very confusing for a lot of people. Hey, buddy, can you turn that down? Can you turn it down? Okay, so I'm on the edge of my seat waiting for this right here. That's what I've been waiting for all day. That's really the only thing that matters to me. I think that we got ourselves down to, well, let me show you exactly. Oh, I pushed a button here. We scroll back and we take a look. Let's sync up these charts so you can see what's going on here. If we go back and we take a look at where the bears had their position yesterday, it's right here. And then I take and I draw. Yeah, I draw here. Right? We scroll forward. We could see that is where we just got to. And there was a response there. This is the bears' position. This is where they got trapped in yesterday. And this is where the bag holders are. We could see them. There's evidence there. And we know they're there because we can set, especially there, because you see, remember, tension pushed down. So we got down here, we hit the back side of it, it popped up, but I think the market isn't necessarily interested in that as much. The market's interested in finding some bulls. We got to find a couple of bulls. Where are they? Another thing that's interesting about this move down is look at portfolio orders filling here. Nothing. There's no portfolio orders. So this is an interesting market to be in because it's very confusing for a lot of people. And I think there's just a ton of people who are staring at this going, oh, this is so bullish, so bullish. And you're not wrong, but it's looking for bulls, and we got to pick up some bulls. And the thing I want is some bulls. I think the bulls would really love a position right here. I think that the bulls would love that. But the issue with that is, if you push this down, these guys are going to start dumping, and which can create some upside demand. And I think that's what's causing this to have a hard time in this area. That we're going to be looking at popping back up because if these guys are trying to buy out, get out, and the bulls are looking for a bullish position trying to buy in, that's everybody on the same side. We don't have anybody on the other side. They're all buyers. So the question is, can we get some bulls in here? And I think the market's going to have a difficult time getting down under this position really well. The bulls are wanting down in this area. The bears are wanting out in this area after they realize their blunder. They've lost control probability. So I'm looking at this as, this is an area where it's going to have a difficult time continuing down. It's going to keep popping up as people try to execute orders. And the thing I'm waiting for is just this. And this is an easy one to wait for. We just, advanced decline is 11. We just got to see it get down to 0, give us a little trigger there, see if we could trap some positions in, a nice structured liquidity position, and see what we can do from there. That's the next event to look at. So we're just waiting. Now, going into the weekend, the question that you're going to have to answer about, well, what do we do here? Well, if you don't think the market's going to, if you don't think that this low is significant and you don't think that these trapped orders are significant, then you're going to say, well, I don't think holding over the weekend is worth it. Maybe you're seeing these lows as pretty weak and, it keeps moving down. So maybe we could potentially move down. If you're seeing it that way, weekend, no good. I'm seeing it as this was a big win for the bulls. And I think that the weekend does look good. And, well, it looks good for institutional traders are going to be saying things like, well, I'm okay with holding over the weekend because our upside potential is quite a while, a couple of days. That these guys can trap in real quick and it takes them a while to get out of positions. And so let me just scroll back so you get an idea what I'm talking about. We need a good spot. Here's a good trap. This one, similar. This is the kind of thing you expect out of a decent all-day trap where there's lots of pumping. They felt like winners, and then they all get turned upside down, and you get a couple of days out of a trap like that. I'm not looking at these littler ones. I'm looking at the ones where, the bulls, here we go, here's another one. Bulls are in charge. They flip everything down. They're very happy, and then they get turned over. And they have spent a couple of days unwinding that position as prices move against them. So that's how I'm looking at this. And so imagine to yourself what that means. If you have a bunch of bears come into the market, they get trapped upside down. There's essentially free money up here. If the market just went like this and then pushed down, let's say, it got down through that, what does that mean? You have to really think about that. What does that mean? This would be horrible for the bulls to do. There is absolutely no reason to go down to the lows at this point, I don't think. None. So if these bulls cannot manage to just show up, all they have to do is show up today. All you got to do is show up somewhere between now and the close, get your position here. We just got to just show up. And sky's the limit. We're just going to unwind these guys. No problem. Just no problem. So I'm leaning in that direction. It's very simple. I think the bulls have made it pretty clear that they are interested in continuing to play. We just haven't been able to find them down here yet. We've established that the lows are being supported by some complicated positions that allow the bulls to buy into lows. We've established that the bears have had a hard time, that they're upside down. Everything's just lined up for the bulls to show up. So that's why I'm paying attention to this on the edge of my seat more than the usual signal, because it's just free money to the upside. And if the bulls don't show up, if the bulls just decide they don't give a crap, this is a major trend change. The conditions in the market are now the bulls can't pull it off. It's over. The bulls are done. And we're going to be seeing moves back down in, bearishness come flooding into the market suddenly for no apparent reason. And you go, well, what is this? It's like, well, the bulls just are being stupid. They don't have any work to do. They just have to show up, inject some of that nice unmargined capital into the market, and sky's the limit, no troubles. So it's important to keep that in mind. We've got the structure here, and you have to ask yourself what it would mean if the bulls just did nothing. I mean, if this came down and we got a sample here, which is still, that's the thing I'm waiting for, and the bulls just did nothing with it, and tension, you see this dive down, it's pressuring. I think a lot of people had the same thought I did, which is we're not going to be pushing under this position. It's not going to be, this is going to be difficult. And I think this little curl down shows that there's some efforts to try and, thin out the bulls. That looks like thinning out bulls, not bears coming in. It looks like let's get rid of some of these bulls, these smaller hands. Let's shake them off this trade because this could be a potential couple of days, up to a week. So when I see this dive down here past that position and I see this curl, I'm thinking, oh, they're shaking hands. They're trying to shake people out. That's how that looks to me. So if we get this sample and the bulls just do nothing with it, just remember what this is, what this looks like to the bulls. It's a great position. It's got everything you want. There's nothing else for them to want beyond this. And if it craters down and it pushes out down through yesterday's lows and we're testing, it's going to be like, bulls, you messed up big time. This is a big statement. And you could call it mess up. I say mess up because I prefer that in my mind. But really what it is that the impact of the bullish market, the bulls, is faltered. They can't do it. They're probably injecting capital, trying to keep it up, and it's not working. Or more likely, there aren't actually bulls and bears. There's just institutions in one direction or the other. It's just we can't make that distinction because it's so well hidden. So we just have to operate as though there's bulls and bears. Plus, most institutions are bulls and bears simultaneously a lot of the time anyway. But the way that they're leaning is going to be the dominant side. So there's not actually two sides here. There's just institutions screwing retailers as they try and position and catch a little cash there while they drive the market directionally. It's just that there's not actually two players, but we have to treat them individually because a lot of institutions operate as a bear differently than they do at the bull. I mean, you might as well just treat them as individuals. So that's who's here doing this. We're just waiting on this signal, just waiting here. Not much to do. Our advanced decline, if we just sit here for 30 minutes or so, we could probably get a zero test out of it and keep the advanced decline around 1100. That looks like 1600. If we just wait. So if we want to get it before, the next 15 minutes or so like that, and we have it pushed down, getting through 9, the math's pretty simple. You just take the 9, you multiply it by 20, right? Then you take the current value and you say 1150, and you take off 180. You're looking at what, like 980, about 980. And I usually don't think like that. I think 950. I'm just going to round it a little bit. About 950. So if we want to grab that up real quick here, we could push down to 950. Totally could do that. Either way, I think the market's in a really difficult spot here anyway. I think a lot of people are thinking, well, you can't let these bears out. And so we're sitting under the bears position, and it's like, well, you can't let them out. What the heck? They're going to start covering. It's like, well, they should. I would. If I was a bear and I saw this condition going on, I'd sit here and I'd say, I'm dumping. I'm dumping as fast as I can. So we're just gonna wait for that, and it's right there. 8. We're at 8. We're getting close. You see, tension's got a little stutter there. I think that's because this pushed down. There was some shove. Maybe the bears are running algorithms so they can liquidate their position. I don't know. Let's take a look at options real quick here. Let me get rid of me. So there's not much going on here. We had a couple of this stuff going on where people are taking up special options positions. I personally think that these would do better to hedge out a position, but there's no long position so far, so I don't know what you'd be hedging. Nothing. And then we had a little out of the money put here. It's been pretty active, near here, but I think that's because of OPEX, and there's, people are trying to do stuff to take advantage of that. I'm guessing that's what it is. That's causing a lot of that activity. So not a lot going on there as far as I can tell. Nothing compared to yesterday's insanity. So a couple of positions, nothing. I think is all that amazing because they're out of money. That's why. Not, they're out of the money. Oh, yeah. This one right here is, well, it lines up with that one. Somebody got into a position. They have I think this looks like a bullish bias position. Here's an out of the money that's not matched up. There's an out of the money. Yeah, not much out. I'm not as interested in out of the monies. I like in the money. I think they represent some different activity. If we take a look here at our volume profile for today, we can see the market. We had gappers come in, and I think hitting here. And then, let's see, right about here was where the bear position was. And then after that, it just kept going down to the bear. And then we had a response back up to where the gappers were. And I think a lot of people were trying to buy into the gap test, thinking it popped back up. But it ate out their positions and popped back up. So these guys probably dumped down there because they got scared. It was very scary looking. And then we moved back up, of course, to where that they entered. And then we dive back down here. And I think this dive is pressuring all the people who realize the bears are there. And so this is probably the best spot to pick something up. But I don't have, again, I don't have this here. Like, I don't think that the price is going to be able to stay under this position. These are the bag holders. Don't let them out. Every dive down is going to get bought back up. It's just going to pop up, keep popping up. But I still want to see a bullish position. I really like structure. So they're going to have to give me some better structure. Just popping up, it's not that great. I want to see the orders. I want to see the people. I want to see the volume. I want to see it work. I want to see everything line up the way that always happens. This isn't like you don't get markets that just don't have signals. It just doesn't happen ever. I've been watching these analyses for years. You don't get markets that are structured incorrectly. It doesn't happen. What ends up happening is that incorrectly structured markets are not what you think. You're misinterpreting it. You're saying, well, it's okay to drive out of a bullish position without any liquidity in it. Well, what always happens in that assumption is that you were wrong. You just were wrong. It wasn't misstructured. So this isn't giving me the structure. I'm not treating it like the bulls are just so aggressive there's no signals. I'm treating it like it's not ready yet. So we need to get that structure. It's just how it works. And it's how it's worked for years. It's how it's going to work. It'll work this time. You don't get situations where that you just don't have structure. That just doesn't happen. Even during the pandemic, and I talked about this, even during the pandemic drop, there was still a lot of structure pretty much all the way down. So you're not going to just get stuff happening. That's not sensible. I think in really aggressive markets where there's a lot of potential and things like that, structure is more important. Because really what ends up being is that a lot of the time structure is the only communication between the big players. They see what each other are doing through the way how it's structured, and they're sort of communicating with each other in that way. I really think that's how that it works. And so no structure there's no communication, no organization, and nobody trusts anybody. Everybody's out to get you. And you got to see what the other players are doing, and everybody's got to line up. We got to have everybody on one side or the other. And then that's how you run trends. You can't just come in and buy up the market. I mean, I guess you could, but it's not going to work because you didn't structure it correctly. So that's my vent on, like, you can't just have markets doing things. We don't just have markets randomly start trending for a day or two out of whatever. What you have is markets that don't have the proper structure and are dangerous. The risk is a lot higher when you don't have the structure. And I wouldn't do it. I don't think it's a good idea. So I'm waiting for this structure. That's what I'm waiting for. I've been waiting all stinking day. I want to see the bulls. Actually, I've been waiting for 2 days. Even last night it dipped down, and I thought that was a good spot to buy at, but there were no bulls. It drives me nuts. Like, this thing drives me nuts. You can't just say this is great buying and then just buy into it. This is like, what do you mean it's great buying? Where's your evidence? Show me your evidence. Show me where that these people are. Because there is no such thing, there is no good trades which exclude or exclude liquidity. Oh my gosh, my Q. Okay, liquidity consuming institutions. There are none. They don't actually happen. It's the liquidity consumers. They come in, they pay for the liquidity, they eat up the retail orders from Robinhood or whatever. They position on the backside, and then they inject capital that way, and they fight with each other on a very, it's like a slow battle, and they beat each other up. It feels fast when you're participating, but it's very slow. It's not these little tiny whips and pops and 5-point runs and 10-point drops. That's the stuff that pisses you off. They're looking for liquidity. It's a battle over the probabilities. So we're sitting here just slowly making our way down, which churned up a bunch of people. And we need to see these participants. You can't exclude the people who consume liquidity across the broad market. Otherwise, it's not a real trade. So you don't have that. So I'm just making this point because over the past day, yesterday and today, 2 days, why aren't there any options? Well, there's a bunch of opportunities, I suppose, but I want to know who's on my team. Who's on my side? And this is important because you say, how do you make money in the market? And it's actually pretty straightforward. It's pretty straightforward. If an institution, I'm going to redraw. Let's say this blue line right here. Let's say right here, an institution buys. They want to see the market go up. And I buy right here. It's me. I want to see. I have just wrangled this institution. All of their resources now are in benefiting me. That you get the institution. And why would the institution work for you? Well, they're not. They're working for themselves. And so the more people who get in before the institution, the slower the trend rate, the slope. Why? Because, if they inject $1 million into it, that's obviously not enough. That $1 million can only do so much work. And so it depends on how many mouths there are to feed. The more mouths, the harder it is to push up. The less mouths, the faster it goes up. That's just how it works. So you want to get in front of institutions who are reliable. The other thing is you want to make sure that you are not a liability. So if I'm here, me, and there's, somebody right here, and I'm long, and they're short, neither of us are liabilities while price is in the middle. If it pushes up out the high, these people are paying me. You have to know who's paying you. It just doesn't work. You don't have somebody paying you. They're not reliable. It's reliable to say, hey, I found somebody who can pay me. I'm in a position. I have an institution who's supporting me. They're going to be pushing up on price, and they're going to push these guys out. That's a reliable thing to do. You're not asking the market to try and pay you. The markets are going to pay you. They pay themselves. So at this point, if you're sitting here going, well, this is a good buy, I don't disagree with you. I think just overall, I think this looks like a great opportunity. But who's supporting you? Where are they? Point to them. Go to your chart and point at them. What? That's how you know that you have evidence, is you can point at evidence. It's one of the telltale signs is that you can point at it. I don't have anywhere where that I see bulls coming in and picking up liquidity and hitting that liquidity, pumping tension, turning over the bears, liquidating them to get, we're not seeing that. So you can't point at it. What we do see is we had some, off the open, we had bears show up here and then struggle to impact anything to defend this 30-minute cross where that we had bears right here, and they're doing what they can to bring it down. They're failing to control tension. So while yes, they're having a response, the price is moving down, no, they are not successful. They are failing. They are not impacting the probability of the market moving in their favor. All they have done is impacted price, which is hardly structure. Price is something that retailers deal with. The probabilities are not looking favorable for the bears at all right here. They're looking like the bears have put a ton of money into, or I wouldn't even call these bears, I'd just call them sellers. They put a bunch of money into trying to drive things down and get advantage, and they're not. So this is not a long-term push down. It's not the structure. The only reason I think the bears have been able to push this down the way they did is because there's no bulls. There's no bullish position. That's it. That's the only reason they did that. So in my opinion, this move down is all going to get all fixed back up. And if we can pick up a bullish position here, it's going to fix it up. Then it's going to run out these guys and anyone who's lingering from yesterday. That's the objective. That will be the bull's objective. And it's a big old doozy. I mean, that could be 50, 75 points up. That's good. And we got good support into the lows. So these bears are simply driving things down because there's no bulls. There's no one in their way. There's nobody stopping them. Or it potentially could be a collusion. Non-verbal agreement. Where the bears drive this down and a couple of favorite folks get to dump their position and not take a loss. And the bulls are like, sure, we'll let some of you guys out, if you agree to whatever. Maybe that's what it is. I don't know. But you see, we're not staying under this area, and it's not going to happen. I just don't think we're going to. This is not going to happen. Going to stay above. It's just we got to find some bulls. Man, let's find some bulls. I don't want to watch Monday for my bulls, because that means, we got to wait over the weekend, and it's like the narrative doesn't progress, and we've been stuck in this one spot where it's like trap in the bears and wait. I want to move forward. Come on. Look at this. 7. It's just taking its sweet time. All right, 4 minutes. This is a 30-minute calculation, of course. We'll get the next update on the calculation, and hopefully it moves down some more. We get a little bit closer. If we get nice bullish position right here, this looks good. This looks real good. That's what we wanted. And this has been a setup that has taken a week, like a week all week. This is what's been developing, is this. So, and you're going to be forced to make a decision about whatever it is you choose to do, which I don't know what you're going to do. Do what you want to do. Right into the weekend, face plant into a weekend, which is one of the most irritating things markets do. And it's really effective because weekends are terrifying. They just are. Anything could happen anywhere in the world, whether it's theater or whether it's real. And there's nothing you can do over the weekend. So that's terrifying. The most irritating thing they could do, of course, would be to not give us anything, drive the market up, and we don't get any signals, nobody gets in, and then on Monday we have it open down lower, give us a signal, and launch higher. The most irritating thing you could possibly do would be that. And the reason is because a pop up into today's close is going to get a whole bunch of people to say, crap, there's nothing, and they're going to buy it and hold over the weekend, and then it's going to gap down, and then we get a buy signal down here, which just wipes everybody who saw this opportunity coming out into a big old plop of liquidity, shoots it straight up into the faces of everybody who's watching, which this has happened before, but this would be the most irritating and most destructive thing they could do. I think the most structured thing they could do would be to give us a signal here, price moves down a little bit, we get what we want, and then it sort of hangs out sideways. If you get prices moving up too much into the close on a major swing position, a lot of people will buy puts. You'll get the average retailer picking up insurance. And insurance on a winning trade is the secret of the institution. They don't want you to do that. They want you to think that you're supposed to execute a long and a put at the same time, netting you an immediate loss. And hold on to your loss and don't make hardly any. They want you to think that you're supposed to do it all. No. The concept of insurance is one that they're going to keep to themselves. But I think that if you push it up too high, too many people are going to pop into insurance. So if we get a signal and then spend 20 or 30 minutes, even just going flat towards the close, you know, like it's here, and it's like, oh no, there's not enough time, and then shooting it up, a lot of people are just going to dump because it's terrifying. But I don't think this is actually a terrifying spot to buy at. I think it's actually pretty good, even before the signal, just because we're not going down. We're not going to let these bears out. We're just not going to. So there's, I guess you could say, support here in terms of the market doesn't want to become liable for these bears who are stuck and things like that. So this is supportive. We're not going to be dropping. I would love to see a signal right here. And I'm buckling up to be irritated at the market, you know, and it tends to be that I get exactly what I want in the way that I don't want. Markets love to do this. They love to give you exactly what you were wanting, and you just hate the way you get it. You know, it's usually a function of patience, but this is very common. So I wanted some bulls yesterday. I didn't get them. I wanted a good buy near the lows. Well, it was sort of overnight, and I didn't really like that because it wasn't a great signal. Now we're getting closer to sampling some bulls, and it's like, well, okay, it took like 2 days to get this to happen. So it's really irritating to have to wait this long. Here we go. We're at 4. And we still got ourselves 1,100 on the old advanced decline. We're staying up there. Just sort of wait for it. That's the deal. Just a little bit of a move down would be great. If this popped down, if price popped down to like here, that would just, I think this would just devastate anyone who was wise enough to buy under that position here. Oh, here I marked it. I need to make this a number. See, let's see if I'm showing it right. Oh, there we go. Oh, there we go. So anyone who got under that area is very happy. But if we slide this down right into their position, a lot of people are going to be hair triggered about this. Just they're scared of the volatility. But I don't think you should be scared. I think we're headed up, especially if we get a nice sample here. I just absolutely love that. And slow. We got a seconder here. We got a pretty decent low volume node right here. You can see that price already came up to about that area as it's been filling in this lower node. So I think whatever happens here, one of the first places to sort of have a difficult time is going to be right up here, you know, 39.14. Right as we bump into that, you should expect a little bit of trouble. But then it should pop through it, and our point of control right here. And you see that this is really interesting. If we don't get a ton of volume here, the market pushed down, and there was the way the profile is going to look at it is no volume, or less volume at lower prices, because it moved down and there wasn't as much volume. And markets go where the orders are because they're geared towards commissions. So if this pops back up to here and the point of control didn't move down, what that means to the market is, I'm sorry, there wasn't any orders down there. We'd rather hunt higher because the volume is higher, is the way that the volume profile is going to look at that. So something to anticipate. There's that low volume node right there to kind of look at that's developed for today. And just nice and 4, and just staying at 4, aren't you? It's just staying at 4. I also would anticipate, because of the size of the expectation here that we get the tick to push a new high is what it is. So 1100. I want to see the tick hit 1200 or something like that. We had it trying to invert off the open. It didn't quite hold together. So if we could get a nice push up to 1200 as we move out of the lows, oh, it would just be golden. Just the most beautiful thing ever if we can get that. Still at 4. Yeah, it's just sitting there. It's like, what are you guys doing? $55 minutes left. There's enough time to grab up a sample, to do a little fussing, to shoot up. There's enough time to take out, at least get those guys, you know, in a position that's uncomfortable. So there's enough time to pull this off into the close. With 55 minutes left, we could see this pull this off. But if we zoom away before we get our liquidity, I wouldn't do anything with it. Just gonna wait. John says, do you think tension is still too high? 30%. No, we could get up to, with my expectations of what I think's going on here, we've got room. We could get this up to 60% before the market's really got to deal with it. So, you know, if we had a day like this tomorrow, we could probably close at like 45% even and see things making their way higher. If it's really aggressive, you could see up to 60, and then the market's going to have to think about that. But 30 is okay. I'm okay with that. And then daily tension could pop up a little bit. So there's not like a wall there that bulls would run into. If we move this down again, it'd just be irritating is what it would be. But I would also have a problem with that because the setups here, looking at what's been happening event by event, tells me that the bears should not do that. If the bears do that, they're just fundamentally broken. The objective of trading is profits. And so when somebody comes at you and they say, here's a free money, a whole bunch of it, lots of it, you know, and you say, man, I'm busy. You're a broken business. Still at 3. Just waiting for it. That's all. You're just waiting for it. There's not much else to do here. Does anybody know? Did GameStop get to 1,000 yet? It's going back to 20. Go look where the stimulus check, which is like the weird January 16th deadline that was for January 16th, where all the stimulus checks had to be delivered or whatever. January 16th, and price, it's $20. And my bet is we head right back to $20. And the market lets us know stimulus checks are excellent ways to bolster the rich through the poor. I think that's where we're headed, is right back to 20. And all of your stimulus money did nothing but frustrate you. I'm just kidding. I don't care about GameStop. All right, we're almost there. 1 + 1. These enthusiastic people. There we go. We can finally progress our narrative. We are getting, there's our sell orders. These are people who see this cross and they're saying, my goodness, it's negative, and coming in to fill orders. Those orders are filling off of this excitement. They're getting triggered like a lefty, you know, just so offended. And they're going to trigger. And so we watch until that finishes up. Now, there's an interesting thing you could do with sell orders. When you get a whole bunch of volume, you know, coming in, oh my goodness, volume coming into your inventory, you can take you could take buy orders and you could pass them through and match up sells to an institution. Or you could take those buy orders, put them in a bucket-ish, and then take a small loss, but use those buy orders to prop the bid. So the buy orders, they just stick them right at market. So people are getting slippage all over the place, or I guess you could call it spreads. But spreads is just a fancy word for slippage. Lots of it. So either way, spreads or slippage, doesn't matter, however your broker wants to present it to you, they're propping the bid with those buy orders. And so you can hit the bid with all that money instead of selling it to an institutional client. And what that looks like is, if you have buy orders coming in, it's going to look like, right here behind my face, is this kind of thing. So sellers come in and they're propping up the market, and they use that to prop the market up, hitting. And those sellers are all going to be just absolutely negative money. But you can see right after some sort of major position, you can use the volume coming in to push prices for you a little bit. We see it all the time. Not something that I would say, oh, there it is, and then trade it. It's something you anticipate out of a position. So if you see a low and then you see the orders come in and you see what you say, okay, they're using those orders to push prices favorably for the position. I use it as sort of a confirmation that you're playing with the right group of people. So something we can sit and pay attention to. Another thing, I've got this chart up right here. I'd love to see the tick just go whomp once this volume here gets done, which gotta wait for that to finish. Then see this just shoot up, give us our inversion level to play with right out of the position. That's exactly what we want to see. So if we keep filling this volume and we get the volume to stop right here, say right there, and then I want to see the tick shoot up a little bit, or here, wherever, but it's still filling. Then we get an inversion level that we can pop over, give it a little test, and on the way up, we run into that low volume node, which gives us a little trouble, and then move on up through it, and then we just hunt straight for these guys' stops, which is, going to be sitting right up here, and sweep up through them. We could see tension just kind of go like that. Close. I could totally that is a game plan I would. So our upward move is going to could look like a little sweep, a little roll back, a sweep up, a little roll back, and then just in a ramp. A ramp. People calling it a ramp, but it's just because they're not understanding what's going on here. It's not really a ramp. It's just ramming into stops. All right, we're getting here. 20%. Almost done with those orders. Well, getting closer. And then, yeah, I know the Zoom charts are a little bit behind. It's free. The laptop's not the best that they're running on through everything, but it's open. You can see what's going on there. So hopefully the YouTube is caught up pretty good. I think it's behind like a couple of seconds or something, but that's it. So here we go. This is our spot. 1%. We're about to finish up. Here it is. This is the big boy. Just go ahead and screenshot. I'm going to put that up on Twitter. There we go. And wait for that volume to finish up. There they go. All right. They are done filling their position. So, it's up to you what you do with this. We're facing a weekend, so you have to, remember that. You need to I've tried to map out what I think is going on over the long term, the short term, so you can see how all this structure works. And then and you do what you think is best. Okay, so I think this little spot here is a big deal. We've been waiting for this thing to show up for days. It'd be nice to see us just head on up, get to that low volume node, which we have there. Right here. The low volume node here, which is about 915, 3915-ish, 3915, 3914. Get a little something there. Let's take a look. I want to see what that advanced decline, the tick is doing. I want to see a bigger pop out of the tick. Okay. I want to see the tick pop more. Sorry, somebody sent me a confusing message. Let's see what we can do. This is where the bulls need to show up. They, I suppose we could see some teeth out of it. You know, the origin position back here, the scope, the size, all that stuff. But I don't think it's going to be pressing. I just don't think that they should be pressing this down and letting the bears out. You know, like, don't let those bears out. These are the guys who are going to bag hold. This sets up great opportunity. So that's the situation that we're at here. And I think that the bulls should come in here. My expectation is to see them participate for sure. But I definitely think that right now, it sounds like I'm saying just shut off your brain and buy. I really hope you're not hearing that. What you need to do is figure out what your strategy is, and I'm modeling out that I think that there is a longer term upside perspective off of this, and that the opportunity exists there to that side, and that the downside perspective is not as great. And so there's just a better probability, in my opinion, here. We can see who we're we can see the bulls. We can see the bag holders. Well, these ones are soon to be bag holders, but this level right here is the guys who are going to pay. So they're going to be paying out so that you're not a liability. And if the market moves up to here, again, not a liability. So the bulls have, you know, they can be treated, I guess, like an asset, I suppose, to the market. The next thing I'll be looking for is to say, all right, well, our bullish position pops in here. Let's mark it over here. Right about where they finished up their volume here. And they got a little bit more there. That's fine. A little bit more trapped orders, I mean, that came in. And that's fine. Now the expectation is to see the bulls hit. Now we're going to be watching tension here to see if this moves. We should see a price response. We should see tension move up as the bulls take a swing at a position I think looks pretty good for them. That's it. I'm going to go look at some options so I get an idea about price to the right. There we go. Okay, so 30, I'm going to round this down because it's a little easier for me to see. And then I'm pulling up options to see what they're going to look like. So something like this. And I think a couple days out, essentially I'm going to say, well, as things move up, can we get an option with a strike that's, or a strike minus the premium, a put, a long put, that is above 39.08. That's what I'm looking at right there. So we have the potential for teeth. So just remember that. But it's possible, which would be sort of irritating to wait so long and then get teeth. Be like, I wanted to see victory land, but just keep that in mind. I think right here, if I was a major bear, this is it. If the bulls can come in and hit, you know, we're still waiting on this price response. At about 39.08 is where I'm considering this position at. We're still waiting on a price response. We want to see the bulls go up, and be able to move this up while tension rises. If the bulls don't do that over the next 5 minutes, the bears are probably going to be thinking it's attack time and try to run an algo. But I'm anticipating these bulls coming in right here. This is a couple days building up to this moment here, and I think that there's some anticipation, even though there's only like 40 minutes left in the market. 40 minutes, you could get some stuff done, and the bulls can then go ahead and get this thing going, the thing that stuttered for like, annoyingly stuttered for a couple of days, as the bears do their best to do whatever it is they were doing. This is game time. It's crunch time. I think this is a pivotal moment in the market right here. This event is going to make or break this bullishness we've seen over the past month or two. It's a big deal. So just sort of hanging out. We still got, we got 1,000, about 1,000 advanced decline. It didn't really come down. It was just sort of wait until those numbers turn. So not a whole lot of activity there, just waiting. This is the part where you just have to wait. There's not much else to do. We wait and we watch. Let's take a look at where things could be over. If this starts moving up, we get the bulls like I anticipate. Velocity will likely move up with it. Decay would probably just sort of hang out, maybe move a little bit. If the market decides to give us some teeth and move down, we could see decay move down, and we may end up getting a bullish sample from decay on the way down, which I don't really like, because I think at this point, if the bears came in and tried to run this down, you know, they're going to have, I think, to get decay down, they're probably going to have to get price under this position. And I don't think the market's going to like that very much. So I don't think the bears should do it. If the bears ran an algo here, I think it would just do something like that. I don't think they get it under there. Yeah, precedence, because of the precedence here. So we're just waiting. That's it. There's nothing else. You just have to wait. Looking at tension, haven't really seen much of a response here out of tension. I'm anticipating some enthusiasm out of these bulls. I mean, if you've been waiting for something for a day or two, trying to get this thing set up, finally you get the liquidity and stuff, I anticipate enthusiasm. I don't want to see, you know, this kind of thing. We get this kind of behaviors, we move in, and it's like, there's like 10 minutes in the close. I'll lose interest, and we'll just continue this on Monday. I expect the bulls to be a little excited about this. It's like, finally, we are getting the things that we want to see. I'm sitting here thinking like, well, what about teeth? You know, like teeth. You're always thinking about teeth. And it's like, well, what would teeth? I don't know. What would teeth look like? Well, maybe that's it. What would teeth look like? We get a situation where the market moves down. The issue with this, though, the whole issue with teeth at this point is that this is a highly anticipated position that's almost a origin in itself, because been so long that pressing this down and getting teeth out of it, that there, I don't like it. I just don't like that. I just don't think that, I don't like it. What's this? These folks. These folks. Quick with the out of the monies. Hurry. I don't know. Out of the money calls coming in there. Up price. Got up at 4,000 and 40.60. I'm not sure that's supportive because you dump a bunch of out of the money calls on the market and it's a liability. But we could see the market move up to 39.50 before it even really has to think about them as a liability. I'm thinking like this. Like, you know, we did this. They're still far enough out of the money that their deltas aren't going to be moving that much, and so they're not much of a liability. We get a little bit higher, that's going to be a problem. Running the clock. Do you feel? I feel a little bit like they're running the clock. That's how I feel like. Running the old clock. $35 minutes. Look at this here. Tension. Well, we haven't seen any real price response. We're just sort of sitting here. Not the enthusiasm I think I want. I'm just sort of sitting here. Tension sort of sitting flat. The concern here would be that if the bulls appear that they're doing nothing, this is I think the bears, you know, they have a couple of positions here. This one essentially is up here is positive, but they haven't really successfully controlled tension. But if they believe that the bears are just going to do nothing, they're just going to walk away, then it's almost like you're getting an elastic market. But on top of that, you're going to be able to run this here and use that to come down. So tension could come down to like, and that would happen on Monday mostly. But if the bulls appear that they're not going to do anything, we don't get that. I think that's what the bears would be thinking. They'd be like, oh, well, okay, they're not here. They all left already. All right, we get the structure. And then the bulls are going to say, oh my gosh, I'm so sad that I left early on Friday. That would have been really useful to be here for. So that's kind of where I'm at. I'm sitting here watching this. You know, we're not off the hook yet. The risk is still here for both directions because people, you know, they can do things. I have a preference, and I think that the structure leans in one direction. It's just that this is such a hyped up, at least in my world, I don't know about your world, this is such a hyped up position. It's like we've been waiting for this for so long. Is it too hyped up? Maybe. I'm just not sure that. Okay, so usually the way a trade runs, you get your origin, price moves up, you dip back, you get a root. Moves up, dips back, you get a root, and it sort of functions like this. And you can get teeth on your roots and stuff like that. You know, it could dip down a little bit later. That's normal. But this market, you can see, like, we had a root, and essentially this root got run out. You know, you had some teeth here, moved up, then this would have run out anybody on that root, and it tested this one. And if you go all the way back to your origin position, you might as well start tracking an origin. But that doesn't happen until here, and we get an origin. Well, origin positions typically look like this, and you have the origin right there in the low. But you don't want teeth on your origin because your origin should be nice and strong. A lot of enthusiasm, a lot of participation, you know, gusto. I don't know, I'm stepping back looking at this going, we got the guys here, but why the crap isn't it in the lows? Why don't we have this in the lows? What is going on here? I'm not the biggest fan of that. No. That's what it is. Look at attention. You see how it's acting. It's like, is this... Nonetheless, still think here that this low shouldn't really get breached down here. Got all the setup and stuff that we need. It's just, it's like, man, these bulls are not the enthusiastic group. I was thinking, you know, it gets done, they launch it up, they just keep going. They're like, fuck, let's do this. Bulls, you don't have forever. If you don't show up in 30 minutes, I think there's going to be a big old fat algorithm through the floor, because the bears are going to treat that like you just don't care. And that attitude is the arrogant. When you are arrogant when you are too busy. You almost have contempt for bears. Contempt being the bears have been paying you gobs of money and you almost, they're like less than you, and so you just hate them. It's so irritating to have to deal with those people who pay me so much. It's this condescending disdain. And you become arrogant when you're too busy to even show up and take advantage. You're just arrogant. And that arrogance is a thing to keep your eye on. We can't have bulls acting that way. Whether it's truly the way they act or it's just how they seem to act, it is absolutely an indication that a trend is struggling. I don't think that euphoria is actually what kills a trend. It's arrogance. So dumb. I'm so busy. I can't come in and take the money. Oh, I need to go do my nails. My name's Nancy Pelosi and I need to go get my hair done. You're just arrogant, and you're just this disdain for the people below you. That's like they need you. Oh, that's what kills markets or trends, is arrogance. Okay, so just sitting, giving us a little chop. Let's see. Now we need to see tension. I don't know why my arrows go upside. Now we need to see tension have a response. Just a little bit of a move up is not. We have expectations here, right? We have the low volume node. We're going to bump into that at 39.15 or so. Remember that. We've got the point of control sitting right here about 39.20. You know, remember, these are things to bump into. We have, as we scoot up here, we've got a position right here. These guys are going to be a little fussy, but usually when you hit somebody's trade and turn them upside down, they're trying to buy, you're trying to buy, everybody's buying, that's a scramble, and price just sweeps up. So probably get through the point of control pretty good. The low volume node, a little bump there. Little bump there. All right, bulls. See what you can do here. I'm keeping my eye on tension. Remember, the way that you control a market is you pump tension, and that's where these guys are at, is can you pump it? Can you pump it? These guys did not successfully bring the market down. So can we pump it? This is the part where that, okay, psychologically, what you should be going over in your brain is we work through all the narrative to get to the point where that there's genuine opportunity. And the thing that gets you to hold through the struggles is trust. And trust in this instance is where that you stop being the arbiter of new news. You stop saying, look at how smart I am, and you just got to kill off that ego, the one that keeps trying to flip through charts and look at every little tick and blah, 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 blah. Knock it off. When you get into the trust phase, what you end up doing is you use a function in your brain called memory. And what you do is you remember who you were and what you were doing at the moment when the best setup happened. And this is a very difficult function because up until this point, you've been a little data gatherer. You're like, ooh, data point, 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 analysis, analysis. And you are a creator, well, really a curator of evidence. And you develop evidence, you develop evidence, you develop evidence, you develop evidence until you get to a point where that your evidence, all lines up and you get things that you want and stuff like that. And you have to make a decision. And that decision will happen. So, let's say this is your choice. Well, as you move forward, you want to stop being a curator of data points. The reason for that is because if you keep curating information after something, in this situation, you could potentially, maybe right here, pick up a piece of evidence that conflicts with this previous version of yourself. And you might say something like, well, was I wrong? And the answer is, well, when trends set up, what happens? You have that choice moment, and then you move into trust mode. You just are constantly remembering who you were, what you were looking at, and why you did what you did, and trust that you were right. And your job at this point isn't to curate new evidence to find opportunity. It's to use a philosophy called a null hypothesis, which is essentially where you're basically, if you're bullish, you monitor all the bearish things going on in the market, and your job is to constantly reject the null hypothesis. You're constantly going, well, the bears could do this, the bears could do that. Can I reject that? Is that rejectable? Is that rejectable? And that's what you end up doing. And so instead of pulling in new data to say whether it's bullish or bearish, you say, I trust myself at the point that we did this, that everything I was doing and, the person that I was there was level-headed and it was reasonable and I like what I was doing. And then you constantly create null hypotheses, which is a format for trust. So if this keeps doing stuff like this and in the close, you're going to say, do I trust? Do I trust? Is this meeting the criteria of the person that I was? And I promise you, if you try to hold on to a swing trade, by the end of that trade, you are not the same person. It will test you. It will try you. It is difficult. It is hard. So you got to retain this idea about who you were at the beginning of your trade, and constantly you're interviewing this person. Well, is this okay? Is this okay? Is this okay? The bears have this opportunity. The bears have this opportunity. And so it tends to be, in a bullish market, I talk more about bears because I'm constantly testing their proposition, I'm testing their evidence and rejecting and rejecting and rejecting. It does not tend to be in a bullish market that I sit and focus on the bulls. I know what the bulls want, but it just tends to be, this is the way that my brain will function in trends, is you switch into trust mode and you start null hypothesizing, which just looks like, testing that. But make sure that you're not going, I trust myself, the decision I'm making right now. You made one decision back here, and the question is that analysis good? Do you still trust yourself? Has something happened that changes your fundamental premise? Have the bears got an opportunity that's somehow bigger than the opportunity that you had back when you tried to participate? That's how you operate while holding a trade. You don't sit and reevaluate whether you're right or whether you're wrong. You evaluate whether the counterparty has some opportunity for some reason that is, going to change the condition in the market, and you constantly reject. Essentially, you never really should accept your null hypothesis. I mean, you should always reject a null hypothesis. This is just the way it works. By the time that you get to the point where that you can accept a null hypothesis, the bears get some great opportunity. You shouldn't be in a position anymore. Your goal is to catch meat and potatoes. There's no E. you know, if a market goes 150 points, you really shouldn't catch 150 points. You know, if a market moves 150 points, I would anticipate you catch 50. You want to catch the section of the market that's the clearest, that's the easiest, that's the most straightforward, and it needs to be large enough that it impacts your account significantly, and your activity really shouldn't, in my opinion, if you're trading every single day, it might be a little too active. You want to be grabbing up positions where all the opportunities seem to come together and you get great. You'd rather look through your trading history and see big hitters, not a bunch of little ones. It's just like paper cuts are the worst. You're just sitting at your desk bleeding all over the place. It's like, just stop. Analyze the market, get an opinion, and take a position like what we just did. What I'm walking you through right now is you take a position on the market. You have an opinion about it. I'm confident about what I think, what I believe here. Enough that that confidence cancels out that null hypothesis. It's really what confidence is. And you can continue to carry risk when you have confidence. If you don't know what's going on and you don't know who your bag holders are and you don't know who's on your team and you don't know why they would play and you don't understand liabilities and assets when it comes to markets, you're just trading. You're just gambling, really, because you're not participating with the team. You're not doing what markets do. You're just trying to find a good spot to catch a couple points because a $500 is a lot of money. It's like, well, it's a lot of work. If you think about how much time I've spent streaming, walking through this trade, I want you to understand that the analysis that we've gone over for a week since last Thursday, where we got our root position and things have been building and building, this is what it was building for. I have sat and watched these markets for a week for this little situation, and that's it. You have to work this hard. It's not easy. People seem to think that trading is just like back test and walk away, and it's like, no, you can't build an opinion off of a back test and walk away. So we'll see. If this doesn't work out, that's fine with me. That's okay with me. I'm not gonna cry about it. This is the first time that I think we have pretty decent longer term opportunities out of this range. And if you go flip through all the videos and you sort of put it together, you should see that how it all pieced together, how the bears came in, how that they sort of took over, what their objectives were, how they operated, and get used to that kind of stuff. All right, well, it's not moving as fast as I'd hoped with 20 minutes left. I flipped over here to check out the tick. Nope, haven't been able to reach up to get that higher spot there that I was looking at. We're back inside the value area. Sure. So outside, inside retest run potentially, but what I'm sitting here modeling out in my head is like, do you have time to reach the objectives, do the bulls have time to sit and dink around and then get this up to hopefully get this position upside down so that the bears have nowhere to run and there's a big old scramble on Monday? Hopefully. Do they have the time to do that? That's what I'm thinking in my head. Do you have the time? 18 minutes left here. We're getting the velocity is popping back up. We got ourselves a little sample here for the bears. We're going to get a bear position here, bull position. These guys are face to face. They are looking at each other. They're staring each other down. Who's going to win? Who is it? Who's going to win? Who's going to win? Well, if these bears come in and they pop this, they're like, we got an algo. Cool. But I still have a hard time thinking that you're going to get this under here right now. Maybe they do. That's okay. But that's where these guys are staring at each other face to face. Who can win? Now we're going to find out who's going to win. So it looks like the bears, well, they got the signal here, but it looks like it was about the same point as that, which I don't like. I don't like it when that happens. I guess there's like one bar after there was some volume, but I like it to be responsive volume. The volume came in after the signal. This one's better, that mixing with this one. But this is just like a tiny little switchback. I mean, the velocity wasn't even down, so I'm not really looking at that one. This one was actually down negative, and then it popped up and hit there, and I like that a lot better for a signal. So let's see what these bears do. These bears going to grand slam it down through the floor, teach the bulls a lesson. It's, you know, it's the window here that they have is not terrible. These guys, you know, they're going to have their here. So, you know, they could run an algo, get it down. It would curl this bad boy down there. Very frustrating way to close the market. I'd say that the bulls could have done better. That's going to be irritating. So that'll be. And it's, you know, potentially these guys are going to cover up the liability for this bearish position that we've been checking. Maybe that's how they pull this off. We have two of them. I think this bearish position still matters because it's the main bag holder off of this day where we have this whole situation. I think letting these bears push this down and take out this bullish position is going to be problematic structurally. The bears are pumping the market when they're trapped. Oh, come on. Come on. That's a problem. That's a problem. That'd be huge. That's a huge. All right, 39.03. So you know that's about the backside of that position. 390 here is about the backside of that position. So okay, the bears are going. If the bulls come in here, the last 15 minutes, I think they should come in and push this. They are not going to be happy with the response on Monday if they let these bears just have their way. I think it sets the wrong precedent. I don't think they should do it. I'm not convinced that this shove down here. I'm not convinced. And looking at tension, you see how tension is rising as the bears come in? Bears, watch out. Here we go. You got 15 minutes left. 15 minutes, bears and bulls. Bulls, you got 15 minutes. Show them who's boss. Don't let them get a foot in the door. Don't let them push it down. Run the market. We close up, even if the market just was like up a little bit to here, then, you know, I guess we'll just, bears would be sitting there. Bulls are going to be sitting here. They got those guys upside down. It could really be good for Sunday's open. There'd be somewhere to skid to. And then Monday, you know, we could move up a little bit higher, or even overnight. I don't care either way. But these bulls should not be letting these bears do this. They shouldn't. I'm not convinced, actually, that a lot of institutions go home on Fridays, especially not this Friday. I think every institutional trader ought to be sitting at their desk right now, just like, okay, this is it. Because that's what I'm doing, and I am the best sample the market has. Looking at options. These people, and they're out of the money calls. Just what? This is like marching orders going on there. Pull up tension, tick here. Nope, nothing going on there. Tick hasn't popped. Position sideways. We see the impact coming into the market. You see that? See the bulls are impacting tension, where the bears through here didn't impact tension. I think we see that the bulls are here, right here. We're seeing their footprint. It took them a little bit. It looked like what the bulls did was essentially wait for a bearish position to come in. That bearish position hit as much as they could, and the bulls then started to impact tension, which, I don't know, that looks terrifying if you're a bear. You just tried to run an algo and all you did was fail miserably again, because they failed here and they're failing here. All right, bulls, show me your ramp. I have not been scared. Show it to me. 1 minute and we get our 10-minute left algorithm that everybody likes to wait for. The last 10 minutes is the 350 algo is what they call it. Really, it's the 350. Shut off the NBBO and let institutions have their way with it. That's really what it is. I think we see bulls. Velocity sitting here, shaking out. Oh, what is this? All right, here it comes. Let's see if we. You think OPEX is going to screw this up? You think bears are going to use the OPEX volume to maybe stuff the ass and drive prices down, or do you think that the bulls are going to be able to pull it off? This is a tough question. This is risky business here, and that's how trades are. They're risky business. And we get a 10 o'clock. Where's our, sorry, I say 10 o'clock, the 50, 350. Do we get a 350? They are. So Matt was just saying in the Discord, I think the Bears are doing a pretty good job. And right now, looking at we're down, you know, that this right here, and the Bears right here, and the Bears are able to get the price under. This is sweating the bulls, is what is happening. The bulls are sweating, and with tension moving up, though, I think we can see that the bulls are here. It's just these Bears are doing much better job than. And I agree with Matt said that. So we're getting down right to the backside of this position. Oh man, I just don't think the Bears should have it. I don't think the Bears should have it. This is just, you got to remember, sure, this is a good spot for things. The only reason the opportunity is here is because it's sort of a trend inflection point. The Bears pushing the bulls out into the close is a really bad thing for the trend, for the overall bullish trend that we've enjoyed for a month or two. Really bad. This is a big old spot where I see a lot of opportunity, a lot of people sitting. So letting those Bears make money is a huge deal. We close this down here. That puts teeth on this position. But more than anything, these Bears right here are going to be able to dump their position if they'd like to. And it's like, oh, bad. I disagree. You should not let them do that. If we're gonna continue our bullish trend mentality and you know, enjoy the bulls and structure, because Bears are crazy. Do not let the Bears get paid after getting upside. Just don't do it. Yeah, that's what I think. I disagree. I disagree with letting these Bears get paid. Though I do agree that the Bears currently they have two positions. Both are good. This buy position, which had a lot of opportunity on it, is now sitting upside down into the close. And this is potentially pretty motivating for the Bears. But we do see that the bulls were not completely not here. But this is going to motivate these Bears, and this concerns me. I did not anticipate that the bulls would actually just do Nothing here. This is a problem to me, a big problem. Bears are going to get pumped, motivated. I think bears are going to be motivated. This will. This will motivate the bears. They were able to bring this down. The bulls just didn't show. Well, in terms of price, we could see them impacting tension right into the close here. I think this is a problem. I think this is getting ugly. Hey, 325. I think it was Joe was saying he thought that 325 was great. But this is a problem. You're letting losers collect funds, which means that those losers are no longer losers. And you're pressuring the dominant. Well, what I was anticipating is the dominant party, the bulls. Oh, I do not like this. This is going to be a major trend change problem. Big deal. This will be a big deal. As far as I could tell, hopefully you had your risk management going. I think this was an excellent opportunity for a longer term position. And you should be able to see how that this has played out so far. I disagree. I disagree with this entirely. I don't think this should happen. It shouldn't be happening. These guys shouldn't be collecting funds. They are, but they are. So we have evidence. We can see that the bears are doing better than the bulls now. And this will play out more on Monday. So on Monday, we're going to see that we're going to need to keep our eye on how this develops. But my anticipation is that these bears essentially just gave a nod, which I think is just absolutely pathetic. Just pathetic. This should not be closing lower today. And that is why that these bears are running this algo. I don't know, maybe it's OPEX, sure, whatever. But we can see that they just, they did impact tension, but they're underwater. These bears have turned them underwater. So the story goes, the tides are changing. We have just watched today everything change. So next week, my opinions are going to be very different. I think that having the market shove down and really try to take out the bulls, well, have the bears successfully turn bulls upside down. The next thing is it's all basically reset now. So the bears are going to be super pumped. I'm thinking the first thing they're going to do is shoot straight to the origin if they can with an algo. If we close this down lower and we keep these bulls underwater, if that's what happens, the first thing they'll want to do is attack the origin position. That is the first thing the bears would do if we get this to close down under and the bulls are clearly just done. That will mean this. This is the first stop. So getting this down here, closing down here, getting this under, and we see these guys come in tomorrow or Monday, sorry. The market will move down. It'll be looking to hit their stops. And I think the bulls are probably sitting their stops. Probably here. I mean, this is probably where that they're sitting at. If you're conservative, you'd have stops lower where that you'll let's do this. There we go. If you're more conservative, you're gonna have your stops down below this low. I think if we got down here, it would just, it's like obviously, yeah, dead. But that's gonna be a little bit more conservative. These will be the spots to pay attention to on Sunday's open are these levels here, because I think this one's basically been hit and the bulls have just suffered a serious blow to the whole mentality of bullishness. It's a big issue. I still disagree. I disagree. with this whole thing. I think it's all just, and I think the Bears should just get wiped out and we should just launch back up. But I have to accept the fact that the Bears did better today than I anticipated. So next thing that I'm going to be looking for is to see this nod attempt to play out. I still have a hard time calling that a nod because I could see the tension advancing. And that's I really don't like this because it looks to me like the Bulls played and they failed. They got turned over by the Bears. That means that they were less powerful. I disagree. Normally I'd be like, yeah, sure, push down. But right now I'm just like, I completely 100% absolutely disagree with this move down, and I think it's horse crap, and I don't think it should be happening, and I think it's going straight back up. I don't care. I just completely disagree with this. 100%. Letting the losers win? Really? I don't agree. So I'm going to wait until Monday to make up my mind about this situation. But I am surprised the Bears did as good as they did, but I disagree with the way that this happened. I disagree. That's my official position. I disagree, Bears. I know it's a scary rally down, but maybe it's just, OPEX or something like that. But I disagree. I think that this is wrong. We should stay down. So that's my opinion. I am irritated. I am irritated about that. And yeah, I disagree. Disagree with the whole philosophy. Okay, well, I can't disagree anymore. Today we saw the Bears do better than anticipated, but not quite. We didn't actually see the Bulls get liquidated. This is going to have to show up on Monday, where if these Bulls are in here and they're dumping their position here, it did not show up in tension. We haven't seen them liquidated. I don't believe that the Bulls have let go of their position. The Bears are motivated because the Bulls didn't inject as much capital the way that I thought they would. So these guys are going to be pumped. They're going to be motivated. They're looking at this. So this is going to get very interesting Sunday's open. It's going to be a big deal. Monday, we're going to have some insanity. I don't know what's going to happen on Monday exactly, but I think it's going to be insanity because if these Bears get super pumped up that they did so good and they're like, let's inject cash, we could see a big old slide, a big old nasty slide. And then if the Bears, which I disagree with their position, I think they should lose. I think they should head right back up. If the Bears get turned over, this is going to be a big fat scramble. Either way, Monday is not going to be a calm day. It's going to be very exciting. I anticipate weekend news. I anticipate tweeting from crazy people who have credibility. I anticipate this to be just a bloodbath on Monday. I disagree with the move down. So whatever I say, I want you to know I'm trying to create a spectrum here. My personal position, I disagree with this. I don't think it should be happening. So that's just what I think. I think this is going to be a fight, and I think we're going to see stops get pulled out. I mean, we're going to see some activity over this weekend, and you're going to go, wow, why that? And I think it's because this is a big fat fight over who's going to get a control. Are we going to get another leg up in equities, which has implications for the rest of the market, or are we going to get a shove back down and we start to regress back towards the major mean, which could be a big, hairy 100-point drop. It could be just nasty if the Bulls lose control of this. So that's where we are. A lot of big stuff coming on Monday. The only thing that I don't anticipate is a nice quiet day. I do not expect that at all. So if we get a nice quiet day on Monday, I'm probably not going to turn my computer on Tuesday. That's what's going to happen because I'm going to be very irritated with the market designers. So that's where we are. I hope this was useful. Very difficult stuff. I hope that my objective is not to tell you when to do things. It's to give you the structure that I see going on, and so that you can execute with your own tools. You should have lots of cool things that you found that you like that fit your strategy. I know that the way that I like to do things is different than a lot of people. I just have my way. I hope that you have your own way, that you take advantage of things that you think are opportunities, that you take advantage of things. One of my primary objectives is to build an opinion about something. I really like to do that. It's just, it works for me. Sometimes I'm not right. It happens. Sometimes I'm right. That's also happens. That's my favorite version. So that's where we are. There will be a couple minutes here after the close. Things move around. Not sure. Would you run an algo after the close on a Friday when you're pumped? Maybe. I'm not sure. I'm not sure. We got a couple minutes here. I'm not anticipating much. I think this is going to be all about Monday. Can the Bears keep this going? Are they going to really get a nod? Or, you know, and I still remember the reason that I'm not treating this like a nod. I want you to understand the difference. The reason I'm having a hard time saying this is a nod, like I keep trying to, it's because tension moved up. So while yes, they did nothing, they weren't not here. They were here. We could see that. So I'm having a hard time calling this a nod. It looks to me like the Bears ran some algos and they're doing their very best to take out a legitimate bullish position to try and exert their dominance on the market. And that's why I think it's such a big deal that this is irritating me so much. I do not like trend changes, and I dislike bears even more. So if bearishness comes up on Monday, this is what caused it. It was the fact that the bulls had lots of money and were unable to accomplish any of that money. They couldn't get that work done, and that's sad. It's always sad to me to see the bulls struggle out of such easy opportunity that they could have had. Anyway, I hope this helps. I'd love to hear your thoughts about what you think's going on here. Maybe you guys have notes about things. I read those things. I'm always paying attention to what you guys have to say. Make sure you post charts with your things. Don't just post, I think this. Don't say things like, did you see the VIX today? Oh my gosh, slam dunk. I don't know what you're talking about. I don't know what time frame you're on. I have no idea what you're looking at. I don't know what you're screenshot your charts, please. Your little notes, and show what you're looking at so that we can see it too. Then we'll understand you. And that's the easiest way to communicate with everybody in the, take your screenshots so we can see. At this point, I'm having a hard time saying that the bulls are going to do much. I don't like it, but we may have just witnessed the end of the bull, the major bull. I don't like it. I hate it, in fact. I was very irritated with this, but we may have just literally witnessed the bull market die. I want you to understand how significant I think this event was. We may have just watched the bullishness in the market display that it is over. That's what this was to me. And that's why I'm irritated about it, because it's going to change everything. I don't like the Bears anyway, but we may have just witnessed that. So keep that in mind. This is not a little thing that just happened. I think this is a big deal. So I'll be back. I'll post some stuff. I'm definitely going to be watching on Sunday's Open to see how things react, but I will be back Monday to